Hi guys, welcome back to this series of videos. This is a continuation of where we stopped the last time. So today we'll continue with our training. So far we have been able to achieve this. Please, if you are just joining, perhaps you should go back to some few videos so that you can catch up to this level. In continuation of our work, we'll try and get into this deduction part of things so that we do statutory and non-statutory deductions, which is part of in fact is the core components of this payroll. But before we proceed with that, I'd like to create February salary. We have been working with January all along. Let's assume that we just started this company, then January is gone already. We have paid out this net, and this union due and punishment have been into their appropriate account, such that the whole amount for that period, or for that month actually, is 1.390 million. So we'll just duplicate this payroll, January payroll, then we'll continue with that. So to do that, you right click on that sheet and then you move or copy to another place. Of course, we are still working with inside the same payroll file or spreadsheet. So we also have the opportunity, once we open the workbook, we select the workbook, it is going to list the available sheets for that workbook, so you can select where you actually want to insert the new sheet. And we also have the opportunity to create a copy or to move it. When we start having various workbook, we will understand this better, but for now let's just quickly create something and continue working with it. If I want to move this to the end of this workbook, it means to the end somewhere here, we'll have but what we want to do is to put this new sheet, this one we want to copy, this January salary, we want to copy it and put it in between January and salary scale. So we'll put it on this salary scale such that it will move the salary scale downward, moving it to the end and inserting this new sheet in the middle there. So, and I'm going to create a copy because I want to create a copy of the January salary and put it inside. So you create a copy right there and you click on OK, and as we can see, it has created in a copy of the January salary. Is the same thing, with everything is the same. Salary, the formulas are the same, everything is just a replication of the entire sheet. So here now we just need to rename this guy to February salary. In fact, I just leave it at February. Since we are working on payroll, we know we're working on payroll. Let's rename this to just January, like so. And we'll start editing this to suit exactly what we want. Now, as this is done now, I think we can come here and change this January to February. The changes have began just like that, so we know we're dealing with February. So for February, in case we have new staff or we need to remove somebody and things like that, so we can begin to do that here. For instance, let's assume that management has fired Mr. Bauchi for misbehavior or bad conduct or something like that. All we need to do is just remove him from the list like that, and we can renumber this like so. In practice, if you are having a variance just like this, for instance, because in January we have 13 staff, February now we are having 12 staff, we need to have a variance sheet to give whoever is looking at that information, auditors perhaps, reasons why you have that variance in your payroll. You may want to write something, a note here, a variance note, or something like that. That so staff has been removed due to whatever reason the case may be. So just put it in mind is standard or normal practice that you have a variance sheet. In some cases, that sheet is usually required. As auditors, they will require or request for your variance. What happened between the last month and this month? Why are we not having the same amount? And variances is not just because of removing a staff. You may also deduct salary or reduce salary or increase salary, things like that. All of those things are variances. It means why the difference between the last month or the previous one and this present one. You want to explain to us, as auditors. May not even be necessarily government auditors. If it's a limited company like our own, you have external auditors who will come to your company and check your books. If they are having or seeing things like this, if you are paying gross of 1.39 in January and in February is 1.30, 1.31, definitely there's there's a difference. So the variance sheet is going to assist us. Of course, we're not going to do variance sheet in this series of videos. So it's just a file. A sheet may even be a Word, Microsoft Word document, just a variance telling the difference or explaining to them rather why you have the difference. Like so. Let's include another staff, because we fire somebody, we need to replace them. Let's include another staff. So like so, we insert, and as you know, we have eating. So we want hide. I can say Jigawa. Oh, Jigawa is there. Niger. I think it's Mina, like so. Press tab. Let's give this person store manager, like so. So just copy everything about the store manager. So look at the store manager that we already have. Remember, these are formula. We are not copying figures. So we copy that, Ctrl C, or you right click on copy. Then we come here and press enter, or you press Ctrl V. And as the case will be, this is our store manager. We're having everything is the same, and then we can just replicate all of these formulas like so. And so perhaps we can let's have two more staff. So because we will be using this file in the near future, and those variances needs to come out so that we'll have something good to work with. Oh, sorry. Okay, so we have delta. Sorry. Like so. And then we can have alright, so let's have IT manager and a store manager. So we can hide these ones, conceal it. So IT manager, we just copy the formula for IT manager. I have Ctrl C and I'm just pressing enter to paste. Store manager, I will just copy everything like so, and then we'll paste here. And we can replicate the rest of this formula. So now we have a good variance, 1.57 and 1.39. So all we need to keep in mind is those changes might not necessarily be the money. We can have the same gross for that month, but staff names could have changed. So it is best practice that we have a variance sheet to explain those differences. Now to the business of the day, actually we want to have different deductions, statutory and non-statutory deductions. So all of this union due and punishment is just they are statutory. Non-statutory. Statutory means they are required by law, and non-statutory is just a personal or is deductions. So because we need some, we're going to create or insert. Let's do just 2 for now. So we can have, what they mean by statutory deductions are those deductions that are allowed by law before calculation of tax. Because if you are doing a statutory deduction, it means those calculations will be removed or deducted from the gross before they calculate, will be considered for tax calculation. See, non-statutory is not government business when it comes to taxation, because as a staff everybody must pay tax. As long as you are working and earning money from an organization, you are subjected to income tax. So before tax is calculated, there are some reliefs that are allowed from your gross. So such reliefs are, they are calculated based on these allowances, and they reduce your tax amount that you need to pay. These are statutory deductions. Non-statutory are not considered for tax purposes, because you are earning 200,000. If you want to pay tax, these two deductions will not be considered. As far as government is concerned, 200,000 is what you are earning. They will calculate tax on this 200,000, regardless of how many deductions these are. But that is where statutory deductions now comes in. Before they calculate tax, those statutory deductions will be considered. If the total statutory deduction is 50,000, for instance, 50,000 will be lessened from this gross before tax is calculated. Don't worry, all these things you get to understand it if you follow this video series completely. But I just want to quickly, give us but we need to tell ourselves, educate ourselves why we need to do that, because we'll be applying it. So let's differentiate gross amount like so. I'm just going to copy the format painter and put it in like so. Now, statutory deductions. Number one is the CRF, but we're not going to talk about that now. It's a gradual thing. For now, I just want to talk about these common ones. These are the pension and NHF. So we're going to calculate pension now as a statutory deduction, such that it will reduce. Of course, we have not gotten to tax section yet, but it will reduce. The purpose is that it will reduce the amount of tax you'll be paying at the end of the day. So here we're just going to name pension. It is allowed for tax purpose, and NHF, that's the National Housing Fund, There's so many other ones, but we'll just limit this to these two for this video series. We'll continue with the rest after. We will be deducting pension from our gross in order to reduce the tax purpose or the net tax effect. Of course, we're not at tax side yet, but I just want to tell us the essence of adding these statutory pensions. Statutory deductions is to reduce the amount of tax you'll be paying at the end of the day, because this money you're not collecting them now, they're just like saving them into some account where you can have access to them in the nearest future. Pension is well, before you do this, I think you need to consult the latest act for that purpose, for that particular period. There may be a new law, they may have reformed it, they may have amended it and things like that. But what I'm used to is that there are two sides to pension: the employer's contribution and the employee's contribution. The employer's contribution is just part of their own responsibility to contribute to employees' income when they when they will leave the service or when they leave the job, so that they can have something to it's not considered. Actually, what is really considered is the employee side of things. So how much are you removing from your gross salary at the end of the month? That amount will be reduced from your tax, because it is allowed. Do you understand? So and that is calculated, I think it's 8% on your basic transport and housing part of your gross. It's not on the entire gross. That is why we said these are necessary. They are very, these components are necessary. They make up the gross. But for instance, now this pension is not on gross. So pension is 8% on basic transport and housing. And the way to do that is, of course, like we write other formulas. Now, I don't know if you need to go through some videos or something like that. You need to understand how bracket works with formula. That is the board mass side of things. You must understand how this works, because we are going to be using it consistently. In fact, from here, the way we will write this one now, I don't know if we have done that before, but again, it is just 8%. Let's just say 8% of, but we cannot begin to pick 8% of basic, 8% of transport. What we'll do is to add up these three in a bracket and take 8% of it. I think it makes sense that way. So if we're going to calculate all of this in one place and then take 8% of it, so how do we do that? That means we need to put the sum of all this in a bracket and take 8% of it. So to do that, we just the sum of open bracket, sum of what, can just align the three together. Sum of this H9 to J9, close that bracket, and that is the formula that I've written. And I don't think we don't need to log on this, because when we copy, it should change to the next cell, like so. NHF, I think, is 2% on basic. That is what is allowed. Again, please refer to the current statute for a better information on this, so that we mislead ourselves. So this one is 2%, just 2% on basic. So we don't need brackets or anything for that. 2% on basic salary. That is what is allowed. Now that we have this, then we can just replicate all of this like so, and then we can put this like so. So it means the total. Why is this border not doing? So just format the painter and copy it like so. No. Anyway, so we have our total pension now, and we have our total NHF. The work is not done yet. We can include all of this to be, can merge them together to be the all the deductions. Like we know, this is non-statutory, is less concerned when it comes to tax, but of course we are not at tax now. For the purpose of this, we are concerned, it's just still between the management and the staff. To the management, this is the gross we are paying for that month. Now this amount is divided into all of these components. Now what I think we should do is to create two columns for statutory deductions and non-statutory deductions, and we can get our net from there. Please, we need to follow this carefully so that we don't get ourselves mixed up. We can begin to add things now. Let me just add all of this. So because we want to create two new columns, we're going to insert. Now we can just call this non-statutory, and this should be statutory. We can still format it. We want to calculate, we want to know at a glance what is the total sum, what is the sum of the non-statutory deduction that we have made. Of course, it's just two non-statutory. In fact, I think we can create a column here and call this, we can call this ones, let's merge it from here, so we can call these guys non-statutory, like so, and then we can have merge them, so then we can have statutory deductions. So all of these blocks are deductions. This is what we're trying to say. So we can have the right column there, right border, sorry, and right border here too, right border here too, like so. This is just formatting things, there's no big deal about it. Just put a top border there, like so. Yeah, I think we're good to go. Now this total non-statutory, I have a right border here too. So the total non-statutory is just this, well, just these two. So we can have equals to the sum of everything in between this place, because we may need to start including other non-statutory deductions, so we just need to insert, and this would calculate up itself. Instead of us saying is equals to this plus this, you can always use auto sum. It is better that way. For the statutory deductions is the rest of these two, pension and NHF. We can have it like that, and then we can replicate these formulas like so. And now we can create another column for the total deductions. We can have total deduction, which would normally be statutory and non-statutory for the purpose of our own, use. We can say it's just equals to this plus this. We can use plus because they cannot be more than, there's no other type of deduction again, so we cannot have anything in between this space. So that's why I'm using S9 plus T9, because we use here sum. That's because in the nearest future we can have other types of statutory deductions, and we can also have another non-statutory deductions. but there cannot be any other type of deductions again other than non-statutory and statutory. I think statutory should come first, but so that's why I'm using just this. It's just these two. If you think you may have any other thing coming inside of this place, then it is better for you to use sum of ranges. Of range, so that if you include another column there for another type of non-statutory, you will not have issues trying to rewrite formulas and so on. So I just replicate this. It's just the sum of these two together here, so that we can easily write out formula for this net, for instance. So now that we have, again, let's look at this very carefully. We have our gross, which is the total amount that we are paying to our staff. That's what they earn for that particular period. The total amount they earn is not what they are taking home. So from what they earn, we begin to deduct some money. It is advisable that we explain this to our staff. Here we calculate the total amount for this non-statutory here by saying the sum of 09 to P9. This is 09 to P9. We have non-statutory here. And then we have our total statutory deductions, which are these two for now, pension and NHF. So that we now have the total deductions from our salary to be this, as in non-statutory and statutory together here. So that the net will now be the gross minus total deductions. As simple. Instead of us saying minus union due, minus punishment, pension, NHF, we have combined those two here. We can color this space to be, to give us an highlight of the total deductions we are making from this person's salary, for instance. Okay, so let's just write the formula for our net like we have it before. N9 minus, so we can just say this minus, if you want you can say non-statutory minus statutory, but I'll prefer to say sum of, open bracket, these two. Well, I think because it's just no, that's a mistake. N9 minus total deductions, that's the essence of why we create the total deduction in the first place. So that is what we have now, like so. So we can just populate this. Then I write this tick bottom border is tick bottom border right there. I want to expand appropriately. Yeah, so this is what we have now. We can print this for the manager, for the CEO to sign off on this. Then we can proceed with payment. We know that Mr. Lagos, who earns 200,000 at the end of the month, his take home is 174,400 because we have deducted 25,600 from his money. But guys, this is what we have been able to achieve today. I don't need a recap because I think we have done the recap already. We will continue from this point in the next series. Thank you and have a good day.